Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, on Friday, the Australian dollar's demand is slowly diminishing. Since the sharp U-turn from the 76-cent level, the market took another daring challenge to the upside, but it would seem the bulls bit off more than they can chew. After the rejection has now left the market somewhat negative, with a bearish crossover from the stochastic and also the RSI breaking through the 50 midway point to support a challenge towards the level of 75.05 and reassess from there, as a break beneath there would see further guidance to the downside and send the bulls to through the exit door, and instead send the bears on a downward journey to 73, 75.85, which is where the broader target is holding. Any advances I still view towards 76 cents as a potential sell zone. The euro on Friday crushed the support at 116.60 and now questions whether the market can hold up on the next down challenge, which comes in at 115.75. Although we are getting a slight response of demand this morning, may see the market take the RSI out of the oversold range if we get a break above 117.15.25, as this would ignite further momentum, maybe up towards the 118 region. At this present stage, you can see from the heavy downtrend that we've had now for the last 6 weeks, it does suggest that we are or could see a turnaround to a short-term bear case soon. If casting our memory back to late last week, there was the release of the anticipated FOMC minutes, which hinted that the up-and-coming rate hike for June was more or less locked in for the 25 basis points. This week we do have the awaited numbers from the non-farm employment change, unemployment rate, and the average hourly earnings. The Bureau of Labour Statistics will release its report on employment in May on Friday at 10:30 Sydney time. Economists are expecting a forecast around 190,000 of new jobs in May, while the unemployment rate is anticipated to remain unchanged at 3.9. Wages are seen marginally higher from 1% reading to 0.3%. So keep an eye on that. But as I mentioned, we could see a little bit of weakness into this week if the dollar index is showing some pullback from its recent highs of 94.09. As we view dollar yen, you can see now that the market is struggling since the rebound of 108.94. It is a short week this week as the US holiday takes a break today on observance of its Memorial Day, as the market may look back towards the downside of 108.95 to 108.45. Until we get a clear break of the top side of 108.95, then we could see further weakness. But a strong break above that level would expose the region of 110 to 111 again. But technically, the market is still a little bit poised to the challenge of that support seen at 108.95.05 to 108.45 as mentioned. Last week we had Mark Carney speaking, and he came out and said a few surprising things in the market, and at this stage the pound still tumbled to a low of 132.93 and still struggling to stage a recovery. Since hitting the multi-month lows, the market may soon start questioning about the oversold condition. With the interest rate projections for this year still holding around one more 25 basis point hike, is the fact that the Bank of England said it was ready to act if the UK faces disorderly Brexit, which means that the government has signalled that the Bank of England could be prepared to cut interest rates or even freeze plans to increase them in order to support jobs and economic growth should Britain be plunged into disorderly Brexit. So an interesting mixed outcome from Mark Carney. Nevertheless, there is again divergence. I'm from this stage a buyer if we see the market dip towards the region sub 133 with the support coming in at 132.40.45. As long as we maintain above there, then I'm expecting a rise up to 134 and reassess from there. It's disappointing that the fact that the market staged a very bullish move on Friday for gold and took on the challenge of 1,306 but failed to break above there. From the reversal, the market now suggests that we could see a slight pullback. And at this stage, we are looking towards a region of 96 or down towards 94 and reassess from there. This all reversed after the weekend on breaking news on both sides of the US and also from North Korea that Mr. Kim said to the South Korean President Moon Jae-in, he made it clear to complete the denuclearization of the Korean Peninsula. Mr. Kim later spoke of his fixed will that the summit should go ahead. On Sunday, Mr. Trump tweeted that it would help the North achieve its brilliant potential. So let's see how these talks come out. And from going by the news is that the summit is back on again for June the 12th. Resistance and trigger levels still seen at this level 06 to 07. And rounded off with oil, well, the market is still tumbling quite heavily and heading towards this level of $65 a barrel. After falling 4.5% on Friday, the market is showing no turnaround. And what triggered the move was the fact that Saudi Arabia and Russia are going to push for lifting productions later in the year. The total of a boost in production from the OPEC and the non-OPEC countries could add up to as high as 1 million barrels a day to meet the shortfall in supply from Iran and Venezuela. So an interesting turnaround. Nevertheless, the market is still taking out support, and I did have a level at 66.80, but this has been crushed this morning, and we're now looking down towards $65 a barrel and reassess from there. Well, that wraps up for today. Thank you very much for joining me. I hope you enjoyed a great start to the new week.